Hey everybody, this is John. Welcome to the free video. And what it was interesting because a lot of people today were, all the bearishness kind of came out, like, oh my God, this market's topping, it's ready to die, etc., etc. And we've kind of heard this before. And I'm a closet bear, but at the same time, hey, this is a bottoming pattern. We're kind of rallying here on Apple, which is the biggest stock in the NASDAQ, and you can see, of course, the Qs have come up. And so the question is that are there things that we want to look for, like, is Thursday going to be like this massive down day that we need to be careful of, or is it a short trap? At some point we're obviously going to roll over and die, but is it tomorrow? So one of the main things I'm cautious of, at least at this point, is the trend. So the trend closed over 2. And as a rule of thumb, when the trend closes near 2 or over 2, 8 times out of 10 we rally the next day. So if we look here, it was near, right? We had, it was like we did close a little bit up. Here it was near after a big sell-off, and then we had a big rally the next day. Here you can see that was one of the times where it's like, okay, it didn't, again, 8 times out of 10, right? When it doesn't, it actually usually turns into something a little bit nastier. But again, we want to play the probabilities. So that is the kind of stuff that we're looking at. So what else? So the put-call ratio closed today over 1. Now, I'm not so keen on where it closes. I'm actually more keen on the put-call, the 10-day moving average. But the fact of the matter is that when the put-call ratio is over 1, it means there's a lot of people making bets that the market's going to fall. Okay? And, when the moving average moves over 1, it means everybody and their mother is short. And if everybody and their mother is short, the market just rallies because there's no one else left to sell. So again, this is one of those markets where it's very strange because everybody, I mean literally everybody, is expecting this market to fall. By the way, AutoZone there is awesome. But it smells more like a short trap. As a trader, do I believe this rally? No. Do I think that this rally at some point is going to fail miserably? Yes. Okay. But do I think it's going to happen tomorrow, or do I think it's going to happen on Monday? And that's really the key. Do you want to be right, or do you want to make money? And I would rather make money than be right. So yes, at some point I want to short, but I'm not getting any signals. So what do I do? Well, a big part of managing this kind of stuff is, like, if you're in a trade and the markets are a little odd, you got to know how to kind of defend your trades, right? So here's one trade I'm in. Facebook, it just, even today the NASDAQ was soft, but Facebook was fine. I have some call options 37 days out. Why 37 days out? Because that's when they're having earnings. You can see the kick in implied volatility. So I wanted to try to buy these options now before the implied volatility got too high, and ideally I get to hold it for a couple of weeks or more, and the price rallies while the implied volatility increases. Okay? So the question around something like that is that, well, what happens if it's a little soft? I mean, I've got, $60,000, 100 contracts put into this trade. I have no intention of losing $60,000. So part of the question is, what happens if the market gets crappy and Facebook starts to fall? At some point, I want to have a stop loss, but sometimes instead of getting, have you ever gotten like stopped out and then the market does exactly what you think it's supposed to? Well, that actually happens quite a bit. So if you know how to defend your trades, then you won't get shaken out of them, and you can still make money on it even if it initially turns into a loser. So how do you do that? All right, so where I learned how to defend trades, because I mean, it's actually a question I get quite a bit. It's like, well, how do I make adjustments? How do I defend this? And I was like, well, I mean, I can show you, but I actually learned all this stuff from Bruce. So Bruce is, and by the way, I don't know if you guys know, I mean, he spent 20 years trading options in a hedge fund. Like, he knows how to protect his risk better than anyone I've ever known, and he's really good at consistency. I'm like, I've got that, hey, here's the setup, we're going to turn this into a big trade. I mean, I'm the guy for that. But while we're waiting for that to set up, we need to know how to defend and protect ourselves from the crap that we're seeing in this market. And that's what I've learned from Bruce. So he's going to be doing a 3-part series here for March 29th, April 5th, April 12th, because there's a lot of information here. Each one will be scheduled from 6 to 9 Central. It's a 3-part course. You can purchase each one, but my thought is like, well, if you're going to learn defense, learn defense. It's the best investment you're going to make in your trading career. So in this course, Bruce is going to talk about how to salvage a trade that's already blown up in your face, which is awesome. How to identify a trade that is savable or just close it out. And this is really crucial because a lot of times people, I get a lot of emails and calls from people that they're well beyond the point at which they could defend their trade. So you got to know when you need to apply that defense, right? You don't want to do it when it's too late. Methods to retrain your brain with defense in mind, because a lot of times we get in, we just think of how much money we're going to make. But if you can defend it and hold through the wiggles, you can still get to your end goal. How to defend long options, debit spreads, credit spreads, diagonals, butterflies, calendars, iron condors. In other words, if you trade options and want to learn how to salvage your trades, this is the course, and of course, a little bit on psychology. So if you want to do the 3-part course, it's $497, but if you just want to do, one part of it and just kind of get a flavor of it, that's fine too. And if you scroll down, you'll see that you can do each one separately. So if you want to do part 1, $197, part 2, $197, part 3, $197. My thought is you do, all 3, which if you scroll up there, you'll see it, but you can certainly just do 1. Here, he talks about defending long options, debit spreads and diagonals. Completely worth the money for that one class. Then part 2, you kind of step it up. Let's defend credit spreads, iron condors and iron flies, and then part 3, let's defend broken wing butterflies, short-term calendars and long-term calendars. So if all you do is long options, buy calls and buy puts, just do this. If you do all these strategies, buy them all. All right? Hope it helps. You guys have a good night, and we'll see you at the next update.